Good morning, everyone. First of all, we would like to thank you for joining us today, and we hope we'll have a productive session sharing with you our thoughts on the tax and legal issues regarding digital services taxation in Latin America. My name is Nathalie Rodriguez, and I am tax partner at LEGA Abogados, a collaborating firm of Andersen in Venezuela. I lead the tax service line at LEGA with expertise in corporate and international taxation and co-lead the technology and telecom industry line. I have the honor to share and moderate this webinar with the participation of Andres Saladino, partner of Andersen, Argentina. Andres was former president of the Graduate College of Economic Sciences of CAVA. He has been a cabinet advisor to the Ministry of Economy of the nation. His professional and academic experience on international and national tax issues stands out, especially in companies related to the media. He has written numerous articles on public tax issues. He is adjunct professor in the University of Buenos Aires and in the Austral University. He has been an exhibitor of the Professional Council of Economic Sciences of CAVA, Province of Buenos Aires, and at professional councils in the countryside, and he is co-host of the TV show Actualidad Tributaria. Also with us is Mauricio Durango. He is partner of Andersen, Ecuador, has over 25 years of experience in the tax and legal practice, international taxation, and corporate law. Mauricio is currently a member of the Latin America Regional Board for Andersen Global. He was a founding member and general manager of Profile CIA Ltd. He has been a professor at many universities in Ecuador. He was previously the academic director of the Ecuadorian Institute of Tax Law. He was also the former director and president of the board of directors of the Ecuadorian American Chamber of Commerce. His professional experience includes legal consulting and tax planning for national and multinational companies. And also Rodrigo Covarrubias, partner of SKATT, collaborating firm of Andersen, Mexico. He is a public accountant, graduated from Monterrey Institute of Technology and Higher Education, and specializing in finance, international taxation at the University of Central Lancashire in the United Kingdom, Georgetown University in the United States, and Leiden University in the Netherlands. Rodrigo forged his international career at Baker & McKenzie before joining SKATT. He has more than 16 years of experience of high specialty in international tax matters. Rodrigo has participated in different projects implementing international structures linked to Europe and Asia, as well as the United States, Canada, and South America, with companies both national and multinational in various industry sectors. He has been a consultant in tax planning for both inbound and outbound projects. We will handle the webinar as a roundtable session. You can post your questions on the chat box, and by the end of the interventions, we will address and answer all of them. To initiate the session, I would like to give you a brief on where we are and how we got there. We all know that globalization and digitalization of the economy, in fact, and no doubt, has changed the way of doing business along the global system and economics, and has become the greatest challenge for international taxation nowadays. Worldwide income principle based on tax residence and permanent establishment as the nexus notion has become ineffective to tax global, huge corporations carrying out business through the digitalization and global economy. In fact, global companies no longer need physical presence to carry out complex operations. And that has also allows them to allocate and to shift and the profits and allocate them to low tax jurisdictions. This has led global organizations such as OECD and the G20 to challenge digital services taxations and digital services operations that have become a great challenge for countries to effective tax these kind of operations, and undertake measures to challenge base erosion and profit shifting, the so-called BEPS action, specifically Action 1, which address digital economy, and change the paradigms based on new nexus clause focus on significant digital footprint subject to a threshold of business operations within a relevant market, the notion of the market value creation, and the allocation of services and intangible assets risk control. However, the lack of consensus and the complicated implementation ways of said measures make the OECD speed and simplify the path to two pillar options. Pillar 1, focus on a new nexus proposal that allows allocating revenue of multinationals to a market jurisdiction where the multinationals obtains revenues of at least 1 million euros or 240,000 euros in the case of smaller jurisdictions, those who do not obtain more than 40 billion. A percentage of revenue under this scenario and proposal, a percentage of revenue will be allocated to market jurisdiction with Nexus, implementing revenue sourcing in market jurisdiction, limiting segmentation rules, establishing a marketing and distribution profit safe harbor, and simplifying the application of transfer pricing rules in a country baseline marketing and distribution agreements. Pillar 2, which is based and focused on a global minimum tax of 50% in each country where a multinational operates. It is important to mention that recently, over 130 countries, including United States, have committed to implement those measures by the end of 2023. Now, also, some European countries have implemented unilateral measures, including special digital services tax, being the average rate applicable of a 3% over the gross sales, over the special digital services activities. Applicable to companies that operate globally and have a significant digital footprint in the relevant country, and subject to two thresholds are met. The first one is that the net turnover is more than 700 million euros globally, and that total revenues from taxable provisions of digital services in the relevant country is more than 3 million approx. On the other hand, the United Nations Organization proposal is more focused or based on the source developing country perspective, and is based on an income tax withholding, including Article 12B in its Model Tax Treaty Convention, that includes a special category of services called automated digital services, which will be taxed in the country of source by applying a withholding tax. Now, with regards to Latin American countries, as we will analyze today with our invited speakers, taxing digital economy is indeed a greater challenge due to the lack of tools required for that in most of our tax authorities' systems. Thus, only a few countries have already challenged digital economy, in most of the cases through VAT rules and measures, and focus on business-to-business operations. In this slide, I am sharing with you, you may see the summary of the Latin American current position regarding digital services taxation. As you may see, only Argentina, Chile, Ecuador, Mexico, and Uruguay have somehow include special digital services tax regime in their tax legislation. Only Argentina, Chile, and Ecuador have special digital services tax rules, and most of the other countries have challenged digital services taxation through VAT measures in some cases, including special definitions of service as tax event, in other as a general clause, and all the other with or through income tax withholding. Welcome, Andres, Mauricio, and Rodrigo, and thank you for joining me today. Rodrigo, as mentioned in my introduction, the digitalization of economy has changed the way of doing business and has become the greatest challenge of international taxation. We have just briefly summarized how OECD, the G20, the United Nations, the European countries, and also the United States have undertaken global and consensual measures to meet this challenge. In the particular case of Latin American countries, this challenge is even greater because our tax administrations are not prepared to implement effective controls measures to effectively tax digital services. However, there are some countries that have already undertaken legal initiatives in this regard and in our continent. Could you comment to us what is the current scenario on digital services taxation in LATAM, and what are the relevant points to consider for companies in the sector?
Thanks, Nathalie. Of course, happy to. First of all, I'd like to thank everyone for joining us. I hope you're all doing well. That's a very good question because, as we have seen in the past, this and you just described, this is a very complex situation, and these are complex times that we're living in. And in some way, what has led us here and the way we can move forward does need some sort of consensus. And that type of consensus, as we've seen in the past few months with the difficulties for, to reach an agreement at the OECD level, is especially difficult, not only because of the different interests that each country may have, but also because of their capabilities. I think that's a reality. I think it's one thing to think about what they may be interested or what they would like or need, but another thing is what they could actually do and how they can actually implement that. Latin America is a very diverse region with very different tax systems, from territorial to worldwide income, from low tax to high tax. Some are very complex with a variety of different taxes at both federal and local levels, such as Brazil, which we have seen all the different VATs and local taxes. And some are even tax havens. We have some that are just exempting revenue altogether. Some as pure tax havens, as they say, no. So I believe, but I do believe that a common ground is that we're mostly an inbound region. Except for maybe a handful of companies in each country at most. The region is more of a market destination for large multinational companies based in other countries that are really interested in the market in the market offered by these countries. We have highly populous and huge market destinations. I think probably Brazil, Mexico stand out with the highest population and territorial region. This means that we don't have a lot of large companies that may be of particular interest to other countries, but rather it's how large foreign multinationals are going to be taxed in our countries. In the case of Mexico, for example, there have been a couple initiatives that have been presented into Congress seeking to create a digital services tax, such as the ones that were implemented in France, Spain, and other countries, and what was in some way included in those recommendations and directives issued by the European Union. Fortunately, unfortunately, that's maybe subjective, but in my opinion, fortunately, they didn't really carry a lot of interest in Congress. They weren't very much discussed, much less passed. They'd had a lot of issues in how it was drafted and how it would apply. It was a 3% on income tax that applied on the foreign platforms that hired different types of services, such as publicity aggregators and so on in Mexico. So that's not a route. I don't think that the unilateral approach should be the way to go, especially in our country, in our region. So what instead the region has done with what I believe to be a more appropriate approach given the current global situation is using the foreign platforms of digital companies, which, as I said, are mostly foreign and large multinationals, as a means to cover the lack of collection from already existing taxes. Again, Mexico is an example. This has been by attracting digital services provided outside of Mexico by foreign platforms into the territoriality of the VAT. So instead of having recipients such as recipients of such services self-assess the VAT as an import, which would be the common situation in Mexico and most of the region, they now force foreign platforms to register and collect the VAT, leading to a much simpler, quote unquote, I think, tax collection for the government. Additionally, Mexico has also established the obligation for digital intermediary platforms. These can be sort of marketplaces and peer-to-peer platforms, those types of platforms, to withhold and pay the VAT on the income taxes and the VAT and the income taxes on the underlying transactions that are conducted through their platforms. All of this sort of covers some tax compliance collection complications that exist in Mexico, and I consider that also exists in most of the other countries in the region, mostly in B2C transactions or those involving Mexican individuals. What we saw in the past is that individuals mostly are very difficult to tax and very difficult to really go after and identify, quantify. There's a lot of resources that are needed by the government in order to be able to do so. So focusing only on the platform instead of each individual taxpayer for that income tax and VAT that should have already been triggered and paid anyway, is I think a better way to go rather than go on the unilateral digital services tax on the platforms themselves. So, as we will see in the majority of the region, this is still not being done. I think it's just a way to cover up the lack of collection that was already existing. All of this is relevant because another particularity of the region is that individuals are much more difficult to control, as I was saying. So it's, instead of going after the platforms themselves, let's try to use the platforms to cover up the lack of collection that we already had. Argentina, for example, although similar in substance, does have some particularities. I think Andres could probably share that with us a little bit, with what's been going on in your country.
Yes, thank you, Rodrigo, and thanks to the people at Andersen who had allowed me to participate in this webinar. And thanks everybody for participating in it with us. Rodrigo, in Argentina, we can divide the VAT treatment of the digital services in two groups according to who receives them, either the company or the consumers. In the first case, companies, the local rules treat the digital service like an import of services. The local company has to pay the VAT and take that payment as a tax credit in its tax returns. So finally, there is no tax cost for this transaction. If we are talking about consumers, they have to pay VAT through credit cards or banking entities, depending on the payment method of the contracted services. This is the way all of us as consumers have gotten involved with digital services and VAT.
So thank you, Andres. So instead of like in the case of Mexico, where the platform has to register and pay the VAT, Argentina sort of using the banking system itself as a means to be able to collect those taxes, which still are triggered or levied on the consumers themselves, right?
Yes.
So thank you for that, and that takes us, getting back to your question, Nathalie, also to you mentioning the UN model approach very briefly, and as a little bit of background context of what's been going on in the past couple of years and what's been proposed and so on. And I think that approach is quite interesting for the region itself also, because at first glance, when we compare it with the OECD's discussion, which was always trying to be extremely comprehensive and cover absolutely all its bases and all these different moving parts in the industry and in the tax systems all over the world, and in political and economical interests and so on. That took them to having to go through so many different ideas, brainstorming that were bounced around, such as the digital permanent establishment, the market nexus approaches, changing transfer pricing altogether, and now a minimum global tax. I think a much simpler approach could also be just adding a withholding situation for digital services in source countries, sort of what the UN model does through Article 12A. So that could be much simpler, but it will lead us exactly back to that complication that we already had in the region, and the lack of compliance and the complexity in collection for governments with individuals. So mostly B2C transactions. I would sort of try to think that if we were already having trouble collecting the VAT or the income tax that they were already subject to, it's going to be difficult for any government to be able to obligate them to withhold the income tax. So taking Argentina's example, one alternative could definitely be to go that route and use the banking system, the financial institutions, or those aggregators, payment processors that are in there in between, as the withholding agents, instead of having the platforms register. What we have seen in a lot of cases in Mexico is for platforms to register has been very complex. Mexico has a highly digitalized compliance system, but for this registration, it was sort of a hybrid that led to having to appoint a legal representative in Mexico, have a domicile, a legal tax address in Mexico, and a lot of physical presence and appearance before the Mexican tax authorities. So the registration and the compliance itself is very complex for non-residents to be able to do. And that's going to be something that's going to be very important to keep in mind. Chile, for example, has a very similar registration obligation, but with a much more simple procedure. So I think we can also try to keep learning from each other and try to see what alternative works best for the region.
Thank you very much, Rodrigo, and for this clear explanation, and Andres for the update on Argentina. No doubt the challenge is great. It just came to my mind when Andres was talking about using the payment agents and the bank institutions as withholders. For example, in the case of Venezuela, and I think that Argentina somehow is quite similar in that a lot of consumers do not use Venezuelan bank accounts to carry out or buy services through the digital platforms because of the current difficulties of the cash flow in Venezuela, and sometimes they use bank accounts based in other countries. So I mean, that's another challenge for our tax authorities, because how are they going to make those banks to withhold and to file and pay the corresponding tax to the local tax authority? So yeah. No doubt. I think we have a great challenge before us. Definitely. So, Andres, to a greater degree, our countries have concentrated the taxation of the digital economy through VAT. Perhaps it's because this facilitates a little bit the assessment and control of the digital transaction, especially in business-to-business relations. Can you tell us a bit what measures have been adopted by LATAM countries in this regard?
Thank you, Nathalie. So as of us know, it's not news that legal regulations are always running behind events. Even more in these last 2 decades, when the technological advances put the legislations on the spot, and especially in these last few months, because due to the pandemic, we had to change our way of life. depending more and more on the digital services, putting them on this way on a special and main scenario. This is why today, more than ever, governments have to develop different tools to make their own regional economies able to compete in a more equal and transparent market, as opposed to multinational companies that dominate these digital services and, of course, establish themselves in places where they have better tax conditions. Going then to the Latin American situation, as Rodrigo said, our countries have no common regulations, so we have to be able to harmonize our legislations. Although we have very different rules and systems, we can say that each country in Latin America calls the digital service in a similar way, according to similar characteristics. In general, they are also included directly or indirectly in their tax systems. The main points in common are that no country has a special tax for digital services except income tax or VAT. Digital services are carried out over the internet or another network. Basically, they are automated. They require minimal human intervention, whatever way they use to download, to view, or to use them. They are provided by companies from abroad. The service is considered that is given with the IP or CIM card are or where the payment done, banks, credit cards, as we said. This way we can consider that the service effective exploitation is in the country where the consumers lives. The service another characteristic is that the service finally has an economic impact on the final consumer. In B2C activities, the fiscal authorities collect VAT by intermediaries like banks and credit cards. Credit cards are the main. This way, we can affirm that in this sort of business, the rules focus where the flow of the money is. If the activity is B2B, one way is that the local company pays VAT and then it can take that payment as a tax credit. And another way forces the different companies that provide the services from abroad to register in the country where the service is used and pay VAT. That are the general. Those were the general particularities, but in particular, we see different what is going on in the different countries of Latin America. In Brazil, there is no special tax on the digital economy. However, the tax authority has expressed its intention to look for ways for it to be regulated in the short term. In case of Chile, Chile has incorporated VAT in digital services for those foreign companies that are receiving payment from Chilean natural persons or companies. Taxpayers will be subject to a simplified tax regime. Taxpayers subject to this regime will not be entitled to a tax credit and will be released from the obligation to issue tax documents for their operations. In the case of Colombia, Colombia has not incorporated a specific tax for the services into their tax rules, so therefore they have no special definitions for them, but applies VAT. The digital services in Colombia special rules are that if the service is provided to a person responsible for VAT, he or she must practice withholding at the source of 100% of the tax. If the service is provided to a person not responsible for VAT, the foreign provider must declare VAT in Colombia on the bi-monthly basis or may choose to benefit from the alternative system of withholding at the source that will be practiced by the card issuing entities. Virtual education services for the development of digital content, provision of web pages, hostings, and cloud computing are exempt from VAT. In Colombia, also statutory rules are applied considering where the service is given. In Costa Rica, like Argentina, limits the VAT rules for some specific vendors of this kind of services that we are talking about, like Netflix, Spotify, Airbnb, Apple TV, Prime Video, etc. The difference with Argentina is that those vendors would register as taxpayers of their own free will. In Ecuador, transactions carried out by payment aggregators and online marketplaces for the transfer goods or services provided by third parties don't constitute taxable events subject to VAT or income, and therefore will not be subject to withholdings. In El Salvador, since there is not a special digital service tax regime, there is no definition of digital services under Salvadoran tax regulations. Guatemala doesn't have special rules for digital services, but they consider them in their general tax regulations. Honduras hasn't got specific rules either, but they are considering regulating them soon. Meanwhile, the taxation of digital service in Honduras currently depends on the self-taxation carried out by the taxpayers, since there are no specific provisions that achieve the supervision and identification of these transactions. However, the tax authority has expressed interest in seeking to regulate it soon. Mexico has specified definition of digital services and obliged since June 2020 to withhold in those transactions. Vendors have to register in the RFC or tax ID. Nicaragua doesn't have specific treatments of these activities. In Peru, the Congress is evaluating to apply the special tax regarding digital services. However, for VAT, they consider digital service as an import. Uruguay applies VAT to this kind of service. Venezuela applies VAT regulations for digital services. There is not a special regime in Venezuela, but rules set forth the importer of services are responsible for filing and paying VAT, as Nathalie had said. Thus, we could say that B2B business, operations general 16% VAT results applicable. This different way of treat the digital service, we are shown and we will give you in a special PowerPoint after this webinar. Also, the rates are different in each country and range from 8% and 25% in Mexico, 10% in Paraguay, 13% in Ecuador, Costa Rica, El Salvador, 15% in Nicaragua, 16% Mexico again, Venezuela, 18% in Peru, 19% in Colombia and Chile, 21% in Argentina, 22% in Uruguay. In particular, in Argentina, as we have a parallel exchange rate market because of monetary rules, in early 2020, the government introduced a 30% tax to this kind of transactions in foreign currency. In Argentina, again, we have another tax, but a estatal tax called gross income tax, ingresos brutos, with an average rate of 3.5% approximately. It applies on the sales and, in addition to reaching all economic activities, also includes the digital service to consumers, and that is collected the same way that we have been able to see in the VAT. In addition, in Argentina, we have a special regime called knowledge economy law that promotes a lot of activities included in general with no limits, software developments, media, and other activities regarding knowledge issues, with benefits that consist of reducing the income tax rate and refund social security costs. This regime started 20 years ago only for software developments, and in 2019, the Congress extended it until 2029 and now includes a lot of new activities. Finally, I like to introduce a topic that I think is relevant, at least in Argentina. Regarding the income tax, companies that provide services for those and other companies that deliver digital service for us as consumers also usually suffer tax withholdings because of their services. And afterwards, they can't use them as tax credit because they are considered as coming from local source income, and the tax credit it is only computed on foreign source income. This constitutes a cost that is generally not taken into account by these companies, and they have to absorb a large part of their profits. Well, I think that Mauricio is following me, and thank you very much, Nathalie.
Thank you, Andres, very much for your intervention. Mauricio, another formula in which our countries have found an option to challenge the tax of digital services has been through an income tax withholding, and that is in fact the proposal of the United Nations organizations. How have our countries regulated income tax withholding on digital services? And also I understand that Ecuador, in addition, has an innovative and differentiated system through the payment system. Could you tell us how does it work?
Thank you, Nathalie. Please allow me to share the screen.
Of course, sorry.
Okay, well, thank you and welcome everybody. As Andres just mentioned, Ecuador, following the international best practices, amend its domestic legislation so that digital services suppliers by non-resident companies are covered by VAT. Ecuador adopted in 2020 the OECD recommendation regarding design a simplified system for the incorporation of non-resident companies into the registration of VAT payers, so that these companies are responsible to declare and pay the VAT on the services they supply to final consumers. However, the tax rules establishes that payments to online marketplaces are subject to VAT and income tax by the financial system entities or the credit card companies on the entire value paid or credited, without considering whatever its own or third income parties. So with that background, I'm going to refer the Ecuadorian new regulations, which were issued in May, but it's going to come into force in November 2021. In this case, we are seeing a typical local marketplace slide in which nonetheless the type or the different business models that can be a B2B, a B2C, a C2C, or even a C2B, they offer goods and services among a local marketplace, which, as you know, is an online platform that enables the supply and demand of these goods and services from different brands or companies or service providers, which goes to the clients, and the clients have the bottom payment alternative. And this goes to the PayPal or banks or credit cards, which act as withholding agents. This is the typical and normal journey of the purchase. What happens before this regulation? I'm going to mention you. In a case, for instance, a B2C model, where the transaction is 100, we charge a 12% VAT, which will be 12, and the total invoice is 112. This transaction goes among the marketplace, the local marketplace, in which it's important to mention that the marketplace only has a commission of a 20% in this example. So they will issue an invoice of 20 plus the VAT, and it will be a total invoice of 22.40. When the client pays this transaction with, for instance, a credit card, because the bank or the credit card company has to act as a withholding agent, what they are doing is withholding taxes to the marketplace on a basis of 100 This means over the total transaction that is taking place in the marketplace, even though the marketplace only has a revenue of 20%, which is its commission. This, as a result of this, the marketplace is subject to an excessive withholding taxes and affects the liquidity of the marketplace. And also it has an affection that because they have paid an excess taxes, they have to claim it back to the IRS. So it doesn't have many sense about that. So what is the new regulation doing? We have the same journey of the same transaction of 100, where the marketplace has a commission of 20 and the client already pays with a bottom payment. In this case, the regulation, what it establishes is that the banks or the credit cards will not withhold taxes to the marketplace once our IRS in Ecuador qualifies the marketplace for this tax treatment. So as a result of that, the marketplace will not be subject to any withholding tax, avoiding this distortion that we have right now. And the marketplace will be subject to pay the taxes, the VAT or the income tax, directly to the IRS. So in this case, we don't have this distortions anymore once this gets in place. Regarding the payment aggregator, and I have been asked many times, what is a payment aggregator and what's the difference between a payment gateway, the normal and typical payment gateway? Well, a payment gateway is an intermediary that allows e-commerce and typically has restricted payment options, and the ownership commonly belongs to a bank or a credit card company. The payment aggregator is rather more than an intermediary, is an interface that digitize online and or offline payment touch points that allows to connect with multiple payment providers and belongs mostly to a fintech. That's the main difference. So in this case, there are a lot of users in Ecuador, for instance, that go into an offshore platform. In this case, I put an example of Uber. And as you know, they have a lot of payment options, and this reach the credit card companies or the bank. And the banks right now, they are withholding taxes to the payment aggregator. In this case, I put dLocal, which is a fintech from Uruguay, which is a LATAM Andersen company client. They have the cash collector, and they have to pay to Uber, in this case, for instance, in UK. So the same problem that we have is that the banks are withholding all the taxes, the VAT and the income taxes, to the payment aggregator, producing the distortion that we see in the slide before, which is an excess of withholding taxes to an entity that only has a commission. And what we are doing, for instance, in the case of dLocal in Ecuador, is claiming back the withholding taxes in excess to the IRS, and that produces a lot of problems, even though for the tax authority. With the new regulation, this will be the same as the marketplace. This means that the credit card or the banks will not withhold any taxes to the payment aggregator. This will have to pay the taxes directly to the IRS. But well, as you say, there's no free lunch in the world. So all these payment aggregators are obligated to be registered as entities of auxiliary services of the financial system before some control authorities, including the Central Bank of Ecuador. So what they are doing is, first of all, they are taxing all these transactions with VAT. We have a list of all the digital service companies that are doing business in Ecuador. So we have already a list, and they are being subject to, register among some control authorities. So we have a very formal system to this type of marketplaces or payment aggregators. So this is what is happening in Ecuador. The main question here is, if you see the last part of the journey, when dLocal pays, for instance, Uber, we don't have any withholding tax, income withholding tax in that payments abroad. even though the general rule in Ecuador is that every payment made abroad is subject to a 25% withholding tax. In this case, we are not withholding any taxes. So what we think or we believe is that Ecuador should implement an income tax on digital services, as suggested, for instance, for the European Union, and that basically consists in imposing a tax, an income tax, that maybe can be around 3% on the gross income on certain digital services. So I think we're going to move in the second step towards that part of imposition in this type of payments abroad. That's what I wanted to share regarding this regulation that is taking place in Ecuador, and it will become in force in November 2021. Thank you very much, Nathalie.
Thank you very much, Mauricio. Definitely very interesting approach that shows us that also digitalization and artificial intelligence is going to be part of the taxation, and also that there should be tools that must be taken under consideration, inclusive by our tax authorities, because I don't see any other way to challenge digitalization of economy different from the digitalization of the tax systems of our tax authorities as well. And that leads me to a final question or thought, considering that globalization and digitalization of economy will continue, expand, and grow, thus that international taxation principles and paradigms are changing, and that in the near future, transnational companies will be subject to a minimum global tax, that the European countries have just approved new VAT rules taxing not only digital services, but also sale of goods through digital platforms. What do you think will be the future of digital taxation? What do you think are the LATAM challenges? And what kind of measures do you think our countries may implement to align their tax politics to the global markets? I don't know, Rodrigo, if you want to share with us some thoughts or comments on that.
Yeah, sure. Thanks, Nathalie. I think that it's been said a lot before. We're living in very interesting time, because it's not only the digital economy. I mean, it's not only the pure digital companies, but rather it's the digitalization of the economy as a whole. We have to talk about not only digital platforms or digital services providers, but all other companies in industry that rely on the digital means and technology more and more to operate. The biggest focus of this has been how companies offer their goods and services globally and interact with their customers without really needing to have significant physical presence or any at all, for that matter. Thus, the approach that has been taken, and as when we went over that background context, the different alternatives that have been brought up, and the digital PE, the market nexus approaches, etc. But in reality, it should cover all aspects of the business. Take, for example, how the pandemic finally threw us into the deep end with remote work. I think a lot of companies were already, starting to have models with a lot of remote work, but and a lot of flexibility. But the link between employees, employers, and one particular country was, in the majority of the cases, pretty clear. Now having people such as expats that had to move back to their country because of the pandemic or for whatever other reason, and companies seeing that remote work was a little better than what we all probably expected. We saw that you can find qualified people anywhere now, and they can still get the job done. So it may not only be the customer facing or sales personnel and all those other activities that relate more to the market and sales, but also all other types of activities, from back office to engineering, research, administration, anything pretty much. So I mean, this whole digitalization affects the business as a whole, not only not only on where you pay taxes because of where you have sales or where you may have customers, but also where you may end up having some type of people, some type of functions through the people that are located in other countries. We know that the OECD has taken a position on that this remote work should not create a PE or residency issue, but that was more based on the fact that it was a report that came out last year, the middle of last year, pretty new into the pandemic, and it was more based on the fact that it was all as a result of external, unforeseen, and uncontrollable circumstances. So now we're a year and a half into the pandemic. Can we really go on saying that it's circumstantial, that it's temporary? How long should temporary be considered to be? And we still have remote work everywhere, and a lot of companies are still relying on that quite a bit. We're even starting to see companies see it as a real possibility and are planning and structuring their operations with that idea. So should that conclusion change, and should this be covered now? Should we be a little bit more focusing on all those other types of aspects of the business as well? I honestly don't think that the Pillar 2 minimum global tax agreement reached is a comprehensive solution for all of this. The minimum threshold is very, very high and only covers a very limited amount of companies. Granted that they themselves do generate an impressive amount of revenue that will in turn generate a significant amount of tax in all over the world. But the combination of all other smaller ones, will also do the same. So they're not truly tackling the issue, I think, with a comprehensive solution in the end. That covers all aspects of all businesses in all industries. And we may still continue to see a lot of governments that will want to and possibly need to take unilateral actions based on their specific facts and circumstances, which may lead us to different withholding situations or similar, as we talked about, the region relying mostly on the VAT and possibly some local income tax situations is very important, because we have to keep in mind and be very honest in the fact that those foreign platforms did have an advantage over a lot of the local platforms or local service providers, in the sense that the local ones had to collect VAT from the consumers, making their service more expensive than what foreign platforms were accustomed to being able to offer their services and consumers paying for them. So, however, if we talk about a withholding, a digital services tax or something similar, that may also end up being that the services themselves will also increase in price for the consumers, because they'll just turn around and increase the value of the services. So I think it's going to be a lot of that, looking for that balance between the tax situation and the realities of the businesses. And it's definitely, I think it's definitely going to keep on moving and hopefully moving quickly going forward.
Thank you very much, Rodrigo. No doubt, there are a lot of issues around the digitalization of economy, and as you pointed out, it's not only the consumers face, but there are also some other operative issues and activities that the companies carried out, as well as the most valuable intangible asset nowadays, which is the data, that has also increased the value of the company, and that it's shared all around and through global corporations paying zero taxes most of the time. So definitely we are going through a big and great challenge from both sides. The countries trying to challenge the taxation of said operations, and as well for the corporations, on the other hand, trying to structure in a best and more effective way because there will be somehow perhaps situations in which we'll see not only double taxation but multiple taxation, in fact, due for this lack of consensus and for the different approaches in not only in the region but also globally. So I don't know if Andres or Mauricio wants to share any final thoughts. There is a question in the chat from one of our participants, that is, do you consider digital economy should be taxed via a special digital service regime? And then in the same person comments or questions if we think that VAT Levi's taxes to digital services could serve for the same purpose. So I don't know if perhaps Rodrigo could approach the first question, and Andres or Mauricio could share some thoughts in the second one.
Yeah, sure. Thanks, Nathalie. I think that I went into a little bit of this with that last question, you know, I'm trying to think of how this may be going moving forward. I think the special DST regime, as we saw it in some European countries, is not the best given the specific circumstances that we had at that point. Lack of global consensus, these unilateral approaches, I think, just end up leading to double or more taxation. And ultimately, I think that will just end up being somehow shifted to the customers and affecting the market in general. So I'm not too keen on the DST itself. Maybe I'm a little subjective because of the position that Mexico and the region has taken, focusing on local taxes rather than creating new taxes on those platforms. I think, as I said, the global minimum tax, I think, is a good starting point to deal with this instead of the DST. But we'll have to see how that truly ends up covering the needs and the expectations of all other countries that may have smaller multinationals in their countries that operate outside of their countries that don't fall within the threshold, so they're not subject to that global minimum tax, and how we as inbound countries feel comfortable with the amount of taxes that foreign multinational companies that also again fall outside of that threshold are subject to tax in our countries or not. As I said, I think it's a lot bigger than just the DST because it should cover all other aspects of the businesses and not just platforms and similar pure digital services. I think it's way bigger considering all other aspects of the operation. You know, behind those closed doors, what really goes on and how they should be taxed all over.
Yes, I just want to reinforce an idea that Rodrigo mentioned. This is not about digital service providers or companies. This is about the digitalization of the economy in every level. And maybe we are not aware of the dimension this is taking place, but with pandemia, the process accelerated more than 5 years versus what a normal process would have been. So I think the challenge is, and we're going to see a lot of local initiative or regulations taking place regarding VAT or income taxes or other issues. But I believe that in this case, because the dimension this is taking place in the world with this new reality, a global framework, guidelines, the global guidelines has to be issued so every country can adapt to a similar guidelines in their local regulations.
Thank you very much. There is another question. It's a very challenging one that questions the OECD model or proposal, and says that the OECD recommends to apply a withholding income tax of 3% over the gross receipts in digital services. How to justify this special treatment when other transactions is subject to general withholding tax? There is no discrimination issue in the tax treatment. I don't know what Andres, Rodrigo, and Mauricio thinks about it. I first of all think it is necessary to differentiate that this alternative and its unilateral option that some European countries and also other countries like India in the past have carried out. It's not a substitution of an income tax withholding. In fact, is more seen as a special tax over gross sales. And that's why the percentage is low, and even being low, some multinational have said that it's quite have a quite significant impact. To the extent that some of them have also in some particular cases, like in France, for example, and in Spain also, when they first mentioned the possibility to incorporate the Google tax. They say that they were going to put it down to the consumers, to transfer that impact in the price. So in my opinion, it is not a discrimination issue, because it's a different kind of tax. I don't know what Rodrigo, Andres, and Mauricio thinks about it.
Yeah, I think that it depends greatly on what the business model is. The way that the general current withholding tax assumptions and obligations apply is usually related to, royalties, technical assistance in some cases, and similar, and not so much for consumer-facing businesses. So the digital services tax, I think, tried to tackle that consumer-facing business operation directly, rather than going through what a company may need to incorporate into its own business to generate its own profits. And if we had the payment of royalties, for example, or a digital services provider that is subject to the digital service tax, but is also licensing some sort of software or IP or its platform itself, so then that could lead to the double taxation issue of being subject to an income tax withholding and the digital services tax. I agree with you, Nathalie, that they both are completely independent of each other. A big issue is whether or not a digital services tax ends up being creditable or not in the country of residence, because it usually may not qualify as a pure income tax that can be claimed as a credit against its own corporate income tax. Whether there's a discrimination issue in tax treatment, I'm not so sure. I think that it's more the matter of the logic behind the creation of the digital services tax. But as I said, as I think we all share the same idea, we've all said it at some point, but the unilateral approaches only lead to a negative effect. So not sure if I would call it discriminatory, but definitely negative.
Yeah, adding what Rodrigo just mentioned, I think mostly all of our countries in Latin America has a very strong withholding system that territorially you try to impose the income tax when you pay abroad. For instance, in Ecuador, for a general rule, every payment made abroad is subject to 25%. And if you're going to impose a 3% to digital service companies, you can agree, or you can try to discuss if that's a difference between the normal companies and the digital services companies. But I think that technology is a disruptive model of business. So you can compare the traditional with the disruptive technological services. So I think that's the main difference that will point towards this type of imposing taxes in this type of companies. And that's the challenge I was talking about. This is very disruptive, and it's digitalizing all the economy in a different level. So I think we will have to be very clever to understand the difference between the traditional businesses and the technology businesses. Andres, you are with the...
You're mute.
Mute. Okay.
Yes, I think I'm not able to say if it is discriminatory or not. I think yes, it is. But the real thing is that finally the consumers are going to receive or to have the impact of this kind of new taxes or new withholding taxes. I think that's the problem.
Definitely.
And especially in our countries that we are consumers of that kind of these services, no?
Yeah, as usually happens.
Yeah.
Well, thank you very much, Andres, Mauricio, and Rodrigo. I think there are no further questions from the spectators. Thank you to all of our attendees for joining us today. We hope it has been useful to you, and remain at your disposal for any further question that you may like to clarify with us. Thank you very much. Again, Andres, Mauricio, and Rodrigo, and take care and stay safe.
Thank you.
Thank you very much.
Bye-bye.
Bye-bye.